Oh man, I felt like I was on laughing gas today. I'm just sitting back watching the market, just cracking up, absolutely cracking up by what I'm seeing out there in so many various stocks, so many things going on in the market that I thought I just need to do a video today pointing out all the things I was laughing at today because there's just so many funny things going on in this market right now. We're in an interesting moment for the market where the market has a slight bit more positive conviction than negative conviction, but it's not such an overwhelming amount. And sometimes when you get this kind of weird market where there's a little bit more conviction on one side, you get some funny things to happen. And boy, do we have a lot of them to go through in today's video. You guys know the drill. All I need from you, smash a like on this video and make sure you're subscribed. It takes less than 3 seconds, okay? Alrighty, so where I want to start out the video, I was cracking up at this here today. Apple stock was the big news of the day, made a massive move up. It was up $14 a share, up 7%, one of the biggest moves for Apple stock in the longest time. Like Apple stock has really not done too much for a very long time, but it was just a great move here today for Apple stock, for Apple shareholders out there, right? But it was very interesting because I was trying to see like how are they pitching this, right? And I was looking out there and they're talking about Apple stock is soaring because of the AI reveal. I'm just sitting back cracking up because I'm like, no, that is not why this stock is up. Everything was already known yesterday. Everything was shown off yesterday during the trading day, right? And so if anybody looked out there and said, wow, Apple just announced this amazing thing, right? Oh, look at, now you can edit your home screen and change the color of the icons. Oh my gosh, now you can write down numbers on the calculator and it can give you the answer. Like if there was any of those things that were monumental, or oh, you can now use ChatGPT with Siri, the stock would have moved yesterday. The stock went down yesterday, even though everybody got to see exactly what happened yesterday, right? And if you were paying attention, you know what happened yesterday, right? And so then the stock moves up big today and they try to say, oh, it's on the back of AI. It's not. I'll show you exactly why Apple stock actually went up here today, okay? It's very important you understand why the stock actually went up, and it has nothing to do with what Apple showed off yesterday. What it has to do with is what I call analyst upgrade, downgrade cycles, and analysts in their movements, as well as a very well-known investor this morning going on CNBC, okay? So look at this here, right? The new Apple Intelligence AI features will only be available in the fall on iPhone 15 Pro, iPhone 15 Pro Max, iPad, Mac, M1 chips or higher upcoming products, says this analyst. So he says older stuff's going to be obsolete if you want AI, including all those iPhones bought during Rona. We now have more conviction in our super cycle thesis that could result in iPhone revenue growth of about 20% for up to 2 years, right? So first off, my thoughts as an Apple customer with unlimited amounts of money who has iPhones, AirPods, MacBook, iMac, iPad, several of them, right? There was nothing that was shown off yesterday, and I saw everything they announced that I was like, oh my gosh, I gotta get this. Absolutely not one thing. As somebody that's the most core Apple customer you could ever imagine, the person that's most locked in the ecosystem is somebody like myself, and there was nothing that they showed off. They're like, oh my gosh, gotta go get the new Apple products, okay? So that was utterly ridiculous. But an analyst come out and says this, and everybody jumps on it, oh yeah, oh my gosh, everybody's gonna have to buy the newest Apple devices for this AI. This is gonna be huge, right? And everybody runs with it. And then what happens this morning? Well, on CNBC this morning, a man named Brad Gerstner, Altimeter Capital, goes on CNBC and starts parading around talking about he bought Apple stock, right? And he's a pretty big name in the market. Is he a Warren Buffett? No. Or a Ray Dalio? No. But Brad Gerstner is pretty well known, and people get very excited if he comes out and says he bought Apple stock, right? And that's exactly what happened this morning. He went on CNBC, I bought Apple stock, and everybody gets real pumped up about that. So you have analysts come out, give this story about there's going to be a super cycle because of AI, when in reality, okay, here's what's actually going to happen, okay? It's hilarious. That's why I just sit back and I laugh. It is hilarious. So iPhone 16, I've told you guys this is going to be a bigger iPhone that they're coming out with, right? It's going to sell very well. It's going to sell very well. Not because of AI. It's going to have nothing to do with AI or anything else. It's a bigger iPhone. It's as simple as that. It doesn't matter if this iPhone had any AI capabilities, no AI capabilities. It's irrelevant. All that matters is it's going to be the biggest iPhone ever. And when it's the biggest iPhone ever, you know what happens. There's always a super cycle. There's always going to be a lot of people that are going to run out there and get it because it's the biggest iPhone they've ever made. And so it's going to be hilarious over the next, really in 2025 and 2026, when people see the sales that are going to come from iPhone 16, they're going to blame the good sales on AI. They're going to think that's the reason people are upgrading, when it has absolutely nothing to do with why people are going to buy the iPhone 16. It's literally just going to be because it's the biggest iPhone, but it's going to be hilarious because you watch. These Wall Streeters are going to think Apple's winning in AI, and they're an AI company because iPhone 16 sells well. It's like, dude, one, Apple's going to come off super easy comps because iPhone 15 is selling like trash. We all know that, right? That's something I called out way before it happened, but now the numbers are all out there. We know iPhone 15 is selling like trash. So now they're going to have insanely easy comps, and then you compound that with the biggest iPhone ever. It's going to be a great year for Apple next year in terms of iPhone. But yeah, these Wall Streeters, watch. They're going to run with it. Oh, Apple's an AI play. It's an AI company. Listen, man. You got to differentiate between the real AI companies and the ones that are trying to just, get onto the wave because their stock's not moving, which is certainly an Apple stock, right? Their stock has done nothing. I mean, you look at so many of the biggest tech companies out there and how well their stocks have done versus Apple. The real AI plays, Meta, Nvidia, Palantir, right? Like, these are the real AI companies they're really been focused on this long before it was a buzzword, right? Apple missed this train. Now they're trying to, say whatever they got to say. Apple Intelligence, yeah, we're going to leverage that. Now, with that being said, Apple, if I look at kind of valuation here, and we're kind of looking at projections for what analysts are thinking the company's going to do over the next couple of years, forward P on the stock's a little rich, right? It's at about a 30, which is significantly above kind of where the average stock in the market trades at. But keep in mind, it should be a great year for iPhone next year. The sales number should be up quite significantly for the company on a year-over-year basis, which is going to be great. Great news for Apple. I'd be shocked. If iPhone units went down, I'd be shocked. Even if iPhone units were only up like 5% next year, I would also be shocked. Apple should have a double-digit iPhone growth year, which should be very exciting because they'll have iPhone growth along with services, right? So being that Apple has the ecosystem, right, and being that Apple certainly is going to have a great year next year in terms of iPhone, I think it should trade at a premium to the market. So I can't say Apple stock's a great deal, especially if you compare it against Meta, which has far better growth, right? And Google McDougal, which also has better growth as well, right? You look at the kind of the growth projections here for current year expected revenue growth, right? Look at Apple, and then look at Meta, and look at Google. And then look at next year. Look at Apple, look at Meta. Now keep in mind, I think they're probably a little low. I think analysts are a little low with their projections for next year, so I do expect Apple to grow a little bit better than where analysts are at here, but still, they should not grow as quickly as Meta ends up growing, right? And then Google McDougal, we'll see. I think it'll kind of be a dogfight to see who kind of wins that one in terms of growth. But the fact that Apple is trading where it's trading, it's not a great deal. It's not a ripoff. It's okay value. Okay, that's kind of where I'll leave it in regards to Apple. But don't do what these Wall Streeters are doing and think Apple's now an AI play, because that's the way they're talking, and I'm like, no, okay? Tesla, oh man, this one's funny, right? I mean, this is got to be one of the sleepiest time periods I've ever seen for Apple stock, or excuse me, Tesla stock, right? Look at this stock. It's stuck. It's stuck at $170, $175 a share. I mean, the stock can't do anything. It had that one big downward move there, but other than that, the stock is just stuck. It's got to be one of the sleepiest time periods and one of the least volatile 3-month spans I've ever seen in Tesla stock. The stock is doing absolutely nothing, right? Now, what I will say is I do believe actually Tesla's setting up for a major move. Major move that's going to shock people when the move happens. And I think it's happening sooner rather than later. And if I had to guess, is the major move, is it going to be an upward move or a downward move? My opinion is I think the move's going to likely be a major upward move. And the reason I say that is because I don't think you can get any more negative around Apple. We all know this quarterly numbers, they're going to report here in a month or two from now, we know it's not going to be good. We know that. We know deliveries and production numbers are going to be, bad for Tesla, right? We all know that. It's already known. We know margins aren't going to be great, but back half of the year sets up for likely, in my opinion, better margins, better sales numbers, and we have the big event in August, right? The big event in August. So the robo-taxi show off and everything that's happening there. So if I look at Tesla, I think it's setting up for a major move. When I say major move, I'm talking a 20% plus move, okay? And if I had to say is it up or down, I think the move's likely up, okay? So, but it's hilarious just kind of watching the stock do absolutely nothing right now, because this is not usual for Tesla. Like usually Tesla's like up and down and all around and, going through some major down cycle or some major up cycle. I mean, the fact that the stock's 2% for 3 months is pretty wild, okay? Now, PayPal. Oh my gosh, I'm looking at PayPal today just cracking up because this stock is like $65 is gravity for this stock. It's ridiculous. Every damn time this stock breaks 65, it goes right back under 65. It's unbelievable. It's like it's unbelievable in regards to stock. And something else that cracked me up is I saw this, right? This came out yesterday. PayPal Holdings is maintained at buy by Citigroup. PayPal Holdings price target raised to $81 from $79 at Citigroup. And I'm just looking at that like, why even upgrade it? $2 a share? Like what? Or why even, I shouldn't say upgrade it. Why even raise the price target from 79 to 81? Like, my gosh, come on, man. A $2 raise in your number? Like, come on. You got to be flipping my flapjacks. But yeah, PayPal, $65 is gravity to that stock, right? I'm sitting back and looking at AMD today at 158 and just laughing to myself because, it wasn't that long ago that everybody on Wall Street wanted to play AMD, right? It was like, AMD, they're going to play catch up versus NVIDIA, growth numbers, blah, 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 right? And yet the stocks just fell 20+% just in the past 3 months, right? And so it's like Wall Street gets so excited about this opportunity, and then they just flounders there, right? And this is while the Nasdaq's at all-time highs, NVIDIA's around all-time highs, and sometimes I look at a stock like AMD, right? And I think about the Nasdaq being at all-time highs right now, S&P 500 all-time highs. I think about NVIDIA all-time highs, and then I look at a stock like this down 20+% in the past 3 months, and I just wonder to myself, what would that stock price look like on a 3-month if the Nasdaq went down 5 or 10% in the past 3 months? If the S&P 500 was down 5-10% in the past 3 months, what would AMD stock be down? Would we be looking at a stock price down 30%, 40%, 50%? Those are things, when you see this sort of damage in stocks, just understand if the market wasn't so good, many of these stocks would be hit so much more heavily. But some of these stocks are actually being saved by the Nasdaq being at all-time highs and the S&P 500 being at all-time highs, right? I'm looking at Oracle stock. What a hilarious situation this is, okay? Oracle, the Oracle of Oracle. It's the new AI play. I mean, they're buying the stock up after hours right now. It's up about 9% or so, right? And this stock has been nothing but a dog. It's up a whole 8% in the past year. Now, you look at the Nasdaq's performance in the past year. You look at all the other AI stocks in the past year have done absolutely phenomenal. Oracle's done a whole lot of nothing. But people are getting excited about Oracle, okay? Now, these results came out after the bell. I gave them a B-. Okay, so there's some good and some bad here. If you look at cloud services and license support, that's a relatively strong growth segment for the company, up about 10% on a constant currency basis year over year. That's great. However, cloud license, hardware, and services, not so good. But total revenue being up 4%. For Oracle, I guess it's a win. Now, Oracle's got this weird strategy where they keep talking about essentially they're going to have a lot more customers down the road than what they have now. And the customers are having to wait for them to get everything in place with their infrastructure. And so it's an interesting selling case that the management team seems to be using quarter after quarter at this point in time. It's a little weird, in my opinion. If you look at operating expenses, cloud services and license support also went up to 18%. Of revenues here. So that was a little troubling, but sales and marketing, they kept that very good. Research and development, they kept that very good. So overall operating income went up to 33% of revenues, right? versus in the same quarter last year, 30%. Now, they got hit bad with income taxes. So they actually had an income tax benefit in the same quarter last year. Now they had a big income tax expense. So they've actually made their net income go down on a year-over-year basis. So I would look at something like that and I say, okay, something to factor in, but at the end of the day, if income taxes were somewhat normal last year, net income would be up this year. So it looks bad that their net income was down, but it's not. You gotta look a little deeper into the subject than what you see on surface level, right? And then diluted EPS also was down for the company year over year, but once again, look a little further in and you're going to find there's about an $800 million plus difference in just income taxes. So it's not like it's a small amount of money. So just a little food for thought in regards to that. But yeah, Oracle, I don't know if Oracle can be trusted because they keep telling the story about customers are waiting for them to get their infrastructure in place, and it's weird. It's weird, okay? And so Oracle, I've looked at that stock, but I don't trust their balance sheets. Their balance sheet, in my opinion, is bad. And then this whole, the customers are waiting. I don't know. I'm laughing at Meta stock, okay? Because, there was such a silly, easy buy dip opportunity for investors out there who hadn't built a position yet in Meta. The stock went down on those earnings, down to 440 or so, right? It's just hilarious. Hilarious. And I told you guys after that stock dipped, what did I tell you on that Twitch live stream I did? I said that stock's going to be right back up. Right back up. And here we are, not that long into the future, right? Less than 2 months, and we're right back over $500, probably going right back to all-time highs, right? And everybody loves to pile out of these stocks or pile in, and a lot has to do with the algos, and it's just a hilarious, ridiculous situation because you're looking at Meta, and everything's great for the company, and you had that massive drop for whether it's human selling or the algorithms or whatever, and it was just like, I was just looking at that, it's just such a silly drop, and then it's just right back up, right? Everybody piles out, everybody piles back in. Like, what are we doing here? Did the fundamentals of Meta change from here to here or to here to here? No, it's just getting better and better and better. Where are their revenues trending? Up. Where is their amount of users trending? Up. Where is their amount of advertisers trending and amount of ad spend? ARPU, up, right? Where's net income trending? Up. Earnings per share, up. I mean, it doesn't get better than this. This is a company running on all cylinders, right? And so when I look at a stock like Meta, which, by the way, dividends coming up here very soon for any Meta shareholders out there, you should get that in a couple weeks from now. Meta's an easy own stock, right? And this is a type of stock that you need to buy all dips in if you don't already have a position built. It's just phenomenal, right? And that's what I've always done with Meta. Any major dips, which 2022 was the dip of dips. I mean, what an opportunity that was. I bought that stock insanely heavy, and now I get the benefits of that. I receive all these thousands of dollars of dividend money every year. We're up $661,000 on the stock, and I think it'll break $1 million plus in total gains in this portfolio overall. So there's a lot more upside here still to Meta, and it's just a stock that's easy to own. I don't worry about Meta. Zero stress on my shoulders when it comes to Meta stock, right? No, a stock like Nvidia, for instance, it's not as easy to just buy that stock and hold it and then major dips buy it again. Nvidia's tougher, and the reason being is Nvidia, so they want to build out their software business, right? And that should become much more substantial. And Nvidia should build out more recurring revenues, and I think that's going to be very good for the stock long term, kind of like Apple did. But Nvidia still, at the end of the day, is a very reliant business model on the business cycle, the chip cycle. And so when things are great, it's really freaking great for Nvidia, right? They're able to charge sky-high prices for their chips. The margins are astronomically high. It seems like everybody in the world wants their chips, right? And they put up these insane numbers. But then the chip cycle starts to slow down. The orders start coming in slower. Prices end up dropping. You start to get into some price wars, and that's what happens in this industry, right? And so, Nvidia is a harder stock. That's the thing. And Nvidia, I used to own it many years ago in the public count. And then I made a bunch of money in the short term on it, and I sold out of the stock. And so I think a stock like Nvidia is harder. I think Meta is easy to hold for the long term. I think even if you're an Apple shareholder, that's usually a pretty easy stock to hold for the long term. I think stocks like Nvidia, even Tesla for a lot of people, I think they're harder holds for the long term just because of when things are great, man, are they great, and when they're bad, they're really bad. And that's why you see stocks like Tesla, they can fall 50% quick. Stocks like Nvidia can fall 50% quick, right? So just a little food for thought in regards to that. Cake is funny. They're starting to slowly fall in love with my cake. Seriously, they're starting to fall in love with my cake. It's happening very slowly, but they're doing it. Stock's up 3.5%. We're now up already like about 20% on the stock. Never mind the dividends we're receiving from this one. Wall Street's finally starting. They're at the very early stages of understanding what cake has going on here in regards to flower child concept in North Italy and how massive those are going to be around the United States and then potentially international long term. I think they're at the infant stage of like understanding the story, and that's going to be a fun one. It's going to be a fun one because this is another stock that's very easy for me to just buy and hold and then buy on the dips. Very easy. Very, very easy. I don't have to worry about cake. They've gone through recessions. They've gone through high inflationary cycles. They've gone through deflationary cycles. They've gone through high customer sentiment numbers, low customer sentiment numbers. They've gone through it all, right? And so that's an easy stock for me to buy, hold, and buy the dips on, just like a Meta is. Cake. It's cake. It's literally a cake stock to hold. Elf cracks me up because this stock just seems to be kind of stuck in this 175 to 195 area. You know, it has a great day today, up 4%, but then all of a sudden it'll give back 4% the next day or something like that. And so, you know, when it comes to Elf on a shelf, the fundamentals of the company just get better and better and better. And they're not getting better at like a small amount better. They're getting better exponentially, basically every single quarter. So Elf on a shelf continues to just be set up absolutely flipping flapjack and phenomenal. But yeah, you can see the stock, you know, ever since like February. I mean, it just bounces around, and it's kind of stuck until you get another major investor in this one, or until we get another banger quarter that everybody says, dude, we got to stop doubting this stock. It's going 200 plus very soon, right? SoFi, oh man, it's funny, but it's also sad because this is going to be the world's saddest stock. I mean, it's addicted to $7. Seriously. This stock is addicted to $7. Seek help, SoFi. Seek help. Like, you're addicted to $7. I mean, it's like literally every time you think the stock might break out, it drops right back down to 7. And then it'll go to the 6s, then it gets right back to 7. And then it's stuck at 7. It's just, it's insane, like, where the stock's at. I think this one will make a major run, though. Okay? If you want to know when does SoFi go on an absolutely epic bull run for the stock, and when do we get the stock into the double digits and into the double digits forever, right? And clearly out of the single digits forever. That happens when the Russell makes its run. When the Russell 2000 makes its run, you're going to watch SoFi make an absolutely epic run. When does the Russell make a run? We'll see. You know Tom Lee's prediction about the whole 50% small caps this year. Small caps haven't done a dang thing, really, to be quite honest, this year. I reacted to a Tom Lee video on my Palantir video, by the way, on the reaction channel today. Jeremy Lefebvre makes money. But SoFi is going to go on an epic run. And you'll also see that stock go $14, $15, $18 rather quickly. But it's not going to make that run until, my opinion is, until the Russell makes its run. So just a little food for thought in regards to that. It's a waiting game. And then if the Russell doesn't make its move for another 6 months, then SoFi is not going to make its move for another 6 months in terms of that big double digits move, you know, up there to $12, $15, $17 range, right? So that's what we're waiting on there. Ifubo's hilarious. What a random move. The stock goes up almost 10% today, 9.57%. And why did it happen? I tried to find anything news related in regards to this one. I couldn't find anything why it was up 9.5%. They got obviously the suit going on against Disney and Warner Brothers and Fox. We know all that, right? But it's such a random, just 9.5% up. But that's what these dollar stocks can do. I mean, it's just a ridiculous move out of nowhere. I was trying to see, did analysts upgrade or downgrade? The last move I could see from analysts was back on May 6th, over a month ago, right? When this analyst from Needham basically said, you know, the stock's going to be $3. That's their price target for the next 12 months. So that's, you know, well over a double up from here. So hopefully that happens. But, you know, just random moves in regards to stock like that, right? The stocks that suck are still sucking. I mean, you still got many of these great companies. Like, they're truly great companies, but their stocks just continue to suck. and that's Estee Lauder. Estee Lauder is a really great quality company, but they have really not done the best managing that business over the last couple of years. Now, mind you, the consumer environment has not been the best for Estee Lauder over the past, certainly couple of years since the consumer got hit by inflation so bad. But how much can you really blame on just the consumer? At the end of the day, Estee Lauder stock sucks. I think it's gonna come back to life. It's in stock I'm interested in potentially buying, but the stocks that suck are just continue to suck, and that's Estee Lauder. And just vicious. Look at the stock; it just seems to go lower and lower. And once again, I want to bring this point out because it's so important. Everybody understands this, right? Look at Estee Lauder stock; it just goes lower and lower and lower, right? Where would that stock be if we didn't have an S&P 500 and a NASDAQ at all-time highs right now? Where would a stock like that be? Would it be at $80 today, $70, $50, $60? I don't think it's out of the realm of imagination to say the stock would be considerably lower if the market was actually getting hit as a whole right now, right? That's a scary thing for these stocks like Estee Lauder. It's like, what happens if the S&P, what happens if some black swan event happened, or just, I don't know, the economy tanked, or I don't know, the Fed said they're going to raise rates, like something that came out of nowhere that just kind of caught everybody off guard. And the S&P 500 also went down 10-15% quickly. I mean, stock like Estee Lauder is probably sitting at $90, right? $80 in that sort of environment. Just brutal for these sorts of stocks, right? And it goes back to a Starbucks, right? Starbucks, another perfect example, super famous company. Obviously, over the last 20 plus years, been phenomenally run, but over the last couple of years, not so much. And this stock's getting very close now to 2022 crash lows. I mean, think about where the S&P 500 was during that crash. Think about where the NASDAQ was. And then think about where Starbucks stock is getting close to back to those sorts of lows. Brutal. So stocks that are sucking are still sucking, right? Now, this is a weird dynamic. You have copper. We don't talk a lot about copper on the channel, right? But look at copper. Copper's just racing. Copper's doing great. And there's a general feeling that when copper's doing well, that means the economy is going to be doing well. When copper's doing bad, there's a view that the economy is going to do bad. Now, I'm sure you could poke some holes at that. You could find some time periods where maybe copper was doing good and then the economy went bad, or vice versa. But generally speaking, that's a feeling. Copper's doing great. The economy is going to be doing great, right, in the future. Copper's doing bad. Watch out, the economy is going to be doing bad, right? And so copper's just in this major bull cycle. I mean, think about how many stocks copper is outperforming right now. Copper, right? 19% in the past 6 months. That's probably better than 95% of stocks in the market the past 6 months, just to be quite frank. Certainly it's got to be better than 90%, but I think it might be better than 95% of stocks in the market. That's tremendous 6-month performance, right there. Incredible. Now, on the flip side, you have crude oil, which is doing nothing. Here we are. We're about to be mid-June, right? We're summertime. From basically Memorial Day to Labor Day, that's like big travel season. And it's usually seen as the most bullish time for oil price. People expect oil to boom during kind of the summertime, right? And crude's just not doing a dang thing. $78. And we're in mid-June. I mean, that's where you got to look out there and say, are we talking recession or are we not? And who's telling the truth here, right? Who's telling the truth? Is it crude oil or is it copper? Now, I think most very advanced people, when it comes to commodities, would say copper is going to tell the truth more often than crude oil is going to tell the truth, right? Because you've seen time periods where crude oil did really bad, let's say 2016, 2017, 2018, but a lot of people view the economy as being very, very strong, small business being very, very strong during that particular time period, right? So I don't know. I think people will put more weight into copper than they would crude. But it is interesting to kind of see that. And it's like somebody's lying. Somebody's lying about where the economy's headed. It's either crude's lying or copper's lying. One of the two's lying in this situation, right? No, through all the laughter, focus on building a beast portfolio because there's a lot of funny stuff going on out there. There's going to continue to be a lot of funny stuff until the market gets more conviction in being bullish or going bearish. We got to get more conviction because for right now, we're just in a very funny, weird time for the market. But I don't care if it's funny times, serious times in the market, focus on building a beast portfolio. Build the type of positions that you want to hold for the next 3 years, 5 years, 7 years, 10 years, the type of stocks that you feel comfortable. If they were to crash, if they were to go down 20%, 30%, you'd feel very comfortable buying more and you'd almost wish on that happening, right? Focus on that, folks, okay? And that's all stuff we handle, obviously, in the private group. That's all stuff I teach in there, right? Risk, cash management, diversity. I teach you how to value growth stocks, dividend stocks, value stocks, doing financial modeling, all the type of stuff I do on a daily basis. I teach you about SWOT analysis in there. I teach you about understanding moats around businesses, right? What's important to look for in conference calls. I teach you about advanced strategies like hedging. I just did a great video for the private stock group on hedging, actually, yesterday. That went into hedging, right? We talk options in there as well, right? Mindset, the economy, personal finance related subjects, all that's covered in there. Pin comment down there if you're looking to apply to join us in there. And you get to join not only myself, but you also get to join, obviously, a massive amount of people that have either 6 figures, 7 figures, or 8 figures in their own portfolio. So you get to kind of network with some really good people in there. Much love and have a great day.